gentlemen, welcome back to Walk the Block. We're navigating digital finance. My name is Zenith. I will be your host for this evening. And tonight, we're talking about making a little bit of progress in a handful of different areas. Namely, we did get some numbers for CPI, or inflation, if you will. And we also got some job numbers recently. And additionally, small, minor, barely nothing of an update on the Clarity Act, but maybe a further explanation of the situation going on there. And outside of that, yes, we have your favorite Tom Lee. He's back for another clip. I believe this time he was actually talking at a conference in Hong Kong. And as always, has some words about Ethereum and the potential for where it can go. But outside of that, folks, it's good to be all with you here tonight. Good to see my boy Centurion 54X as well. He says, if you ain't first, you're last. There you go. Probably a shout out to the thumbnail we had where with the man in the business suit, the Bitcoin running side by side. Yeah, shout out to people that make good thumbnails. Hard to do, but at least I got ChatGPT to help me with mine. So, gonna apologize up front here. The state of New Mexico is currently under invasion from the juniper allergy season. Fun fact: the pollen has hooks, and it will hook into your nostrils and your eyes. So, got some tea. That should make it all better. But anyways, that's enough of that. Tracker should be on a little bit later. If not, we'll happen to see him next week. But outside of that, by the way, folks, happy 3-day weekend. Hope you guys had a good one. And maybe some folks even made it a 4-day weekend. Got a nice long one. Did have a chance to go play some golf myself. Played actually pretty darn good. I think I shot an 84, but that's neither here nor there. Anyways, tell you what, let's get right into it this evening. So, up first, coming to one of my friends, Brendan, over at the DGen Roundtable. He has a good little synopsis here of what's going on with the CPI report. So, CPI data is strong again. Year over year, 2.4%. Core year over year, 2.5%. Both about 0.1% lower than last month. Are we approaching the 2% target? Yeah, we're working our way there slowly but surely. And it should hopefully help out with the pace that everything's going, because believe me, over the last 5-10 years, it feels like everything has absolutely exploded. But I'm sure that's no news to you because we've all been feeling it in our wallets. Getting down to that 2% number is going to be an important thing because it's going to give the Federal Reserve some confidence what's going on with prices. And then also the other part here is the jobs report came in decently as well. Jobs report also came in and is incredibly strong a couple of days ago, but I take those numbers with a grain of salt. They haven't been accurate in a long time. Well said, sir. If we go and look at our data here, our jobs report estimated that we added 130,000 jobs in January 2026. And unemployment actually ticked down a little bit to 4.3%. So what does that mean? Well, it means the report for January was better than expected, especially in a time period where there's not a lot of hiring going on. But what does that mean for the overall situation in the economy? Well, that means that the Federal Reserve is looking to get towards a more balanced state, where with the jobs market starting to improve a little bit, but again, grain of salt is the real key word here on this one, and also inflation getting closer to that 2% number, it means that whatever is going on right now is working. And if it continues in that trajectory, well, could be a rate cut. And as you guys, I'm sure, are tired of hearing me talk about on here, but rate cuts mean that we're moving towards a more friendly business environment, or a more bullish business environment. If that's the case, odds are people are going to start expanding in the business cycle. When that happens, people are looking for places to park their money, including investments, which happens to be crypto. But as of right now, that's a little bit down. However, I will say it has been a heck of a week when it comes to the bull posting or potential bull posting going on in the near future. Coming to us from Cointelegraph. Insight: according to Grayscale, Bitcoin's recent drop closely tracked high-growth U.S. tech stocks, suggesting the sell-off was driven by broader market risk-off sentiment rather than crypto-specific issues. We got our chart here. So what we're looking at is Bitcoin in the blue and tech stocks in the orange. Well, would you look at that? They actually line up pretty good. So good degree of correlation going on there. And also, fun little fact, the S&P 500 has been largely dominated by the Magnificent Seven over the last 2 years, accounting for nearly 57% of the growth in the S&P 500 just from those 7 stocks alone. And yes, NVIDIA is leading the pack there with everything going on. Okay, so this might be a little explainer about what's going on with the markets, because guess what? Markets are still sitting kind of sideways right now. Current price is $67,340-ish. Could move it any second as I'm talking here. But the important thing that I'm looking at here is that we've pretty much spent almost 2 weeks sitting at this relative position. Based on what I'm seeing, what's going on with the charts is that, well, our moving averages are still adjusting to all the massive price change that we had recently, and they're starting to expand out from each other a bit here. What does that mean? Well, it means that things are progressing in the trend that they've been going on both the short, medium, and long-term indicators. My yellow line there, that is our short-term indicator, our 20-day moving average. Orange is our 50, our medium, and red is our 200-day moving average, our long-term. The other interesting thing that I'm pointing out here is that, well, you'll notice that the initial bounce back actually got higher than where we were recently. However, the RSI, or the relative strength indicator, is showing that we're building more relative strength. Argument for this is that as the market sustains itself at this level, it's building support along these areas, and higher levels of support indicator that price wants to go higher. Conversely, there is also the other side of the argument, which is that having beat the recent swing high of, I know it sounds crazy to say, 72,000. We only got up to about 71,000, just a hair short of it. But it's an interesting point in the market, in my personal opinion, because the lows are going up, but the highs are also going down. A bit of a squeeze, and when those two areas converge, we could see some price change happen, or rather a change in momentum. As it stands right now, we're not that far off from the 20-day moving average. A reversal and a breakthrough of that 20-day moving average would be a very welcome thing, because that means we're starting to move towards the upside, at least in the short term. Getting back to the 50-day moving average, which is currently up at $83,000, that's going to take another bit of oomph to get us there, if you will. So overall, the market sentiment, I will say, is very much down at this moment. Even though the overall economy I was just talked about in those previous numbers is printing some decent numbers. So maybe the explanation that we're following the tech stocks, or largely a risk-off environment, makes sense. Because if we also flip over to the old S&P 500, we've been chopping around for a good bit here. We've been chopping around this area pretty much ever since October 28th of 2025. So yes, that is basically 3 months ago, a little 3.5 months, if you will. So overall economy appears to have topped out at about that $697, $700-ish range. At the same time, we're getting a lot of good indicators going on, but as I'm looking here, our moving averages starting to converge. Could possibly get a crossover, which would indicate a bit of a shift in momentum, but at the same time, we've been chopping in the same area. If you just go sideways long enough, all the numbers start to approach the same area. There's a reason I titled this show this evening, Small Progress, because, well, that's kind of what we're making in a lot of these things. CPI, inflation, jobs, and we should be getting some producers' estimates in later on in the month here. Is it where we want to be? No. Are we still continuing the same direction that we've been continuing for the last couple of months here? Yes. So it's just a good indicator that the current trend is building momentum and moving towards a more steady state of whatever that is. Right now, with the massive price inflections, crypto investors have definitely been scared. And I can understand why. We pretty much had a 50% correction there over the course of 5 months, in a time where we thought that we were going to be going up and to the right even more so. However, flipping back over to the old Twitter as well, some things never change. Half of all Bitcoin holders are underwater right now. Historically, this is the exact moment everyone wishes they bought more. We never learn. So, yes, the bull posting does continue over on X. I think the sentiment has improved a little bit, but morale is still low. I'm not going to lie to you on that one. At the same time, though, looking at this one, this is saying percent supply in profit. Well, anytime we're down below the mean, or one standard deviation below the mean, as we are in these current times, it argues that, it's a decent place to buy. But keep in mind, based on the shape of this graph, I can tell, and the date stamps, by the way, I can tell it only goes back to 2022. So it doesn't quite hit all the longer term indicators that we traditionally be looking for when it comes to, getting multiple data points to actually draw out a conclusion and get some sort of theory going. But to add more data points to the fire, buying the green box never fails. Trading is easy when you have the data. All right, what we're looking at here is we are looking at pretty much an equivalency of the rainbow band when it comes to the Fibonacci-based price action and price levels. As it stands right now, we're getting towards some pretty historic lows. The last time we were at this point was actually back in the 2022 bear market. And before that, COVID dip. Before that, 2020 bear market. And before that, yes, the old 2016 bear market. So again, another data point kind of showing this, which is that price is relatively low. And another factor to take in consideration here is the price of Bitcoin mining. We are below that price. It's very difficult to move below that price, especially for a long period of time, but we're there currently. So with that being said, people are saying, like, look, is there blood in the streets? Yes, but The seasoned trader knows that when there's blood in the street, there's time to buy. Please know, I'm not trying to give financial advice here because I would never do that. And the SEC would definitely be very mad at me about that kind of stuff. But looking at historical trends, these are some classic indicators of oversold territory. Now, does that mean I'm saying that the price is going to recover immediately and go up? No. In fact, you can just look back at the chart, our area of 2022 here. We spent a good amount of time below this area, and that blue line is approximately $25,000. Because remember, we dropped all the way down to about 17,000, and then our final drop here, that is the FTX collapse where we went down to our final $15,700. During that entire time, that's almost the course of an entire year, about 9 months, if I believe correctly. We spent under that area, and historically, those would have been good places. If you bought and hold all the way to what was the top, and then you also had the wherewithal to sell, that's effectively looking at like a 5x there, which, hey, that's nothing to shake a stick at, especially with the world's largest crypto market, namely Bitcoin. Granted, I do believe that a good degree of that was traditional finance really pumping it to the moon with the, or not the moon, but pumping it up rather with the amount of total capital that came in during that segment. But at the same time, though, these are traditional metrics that we've looked at for a long time here. And a lot of people have been looking at for a lot longer than even I've been in the crypto game since 2020. But we even have more stuff going on. Bitcoin and gold. Good old Bitcoin and gold ratio. The monthly RSI just broke its 11-year generational bottom. For the first time ever, Bitcoin versus gold has printed 7 consecutive months of red candles, an extreme level of relative underperformance. We've just entered what could be a once-in-a-generational Bitcoin buy. So again, what we're looking at here is a ratio trade between Bitcoin and the price of gold. So the higher this chart goes, the higher Bitcoin is valued over gold in that same time span. This one I'm a little more suspicious of, partly due to gold's absolute outperformance over the last pretty much 2 years. I'm not going to lie. Gold has been on a tear, and especially so in the last month or two, going truly parabolic when it comes to the shape of that graph. So something like this as a data point to take into consideration, you got to take it with a grain of salt because it's a ratio. Remember, the math you're doing here is just Bitcoin price divided by gold price. It's not going to tell you anything else about the rest of the market. It's just going to tell you about these two assets together. However, Bitcoin allegedly is digital gold, and gold is, well, gold. And both theoretically are hedges against inflation and dropping value of the US dollar. So all in all, interesting data point to take into consideration as well. If anything, it might be an indicator that gold has been outperforming, and in the very near future, there may be a time where Bitcoin actually rallies back. I'm not saying immediate future, but near future. Because keep in mind, Bitcoin 4-year cycle theory, which is based on the halving 4-year cycle, and the changes in the supply and demand curves along that time frame would suggest that, well, theoretically, this chart could bottom out in the bottom of 2026 when we are predicting what is effectively the Bitcoin bear market, according to that theory. However, many other competing theories that we got going on here tonight. Additionally, this is possibly another explanation for that last chart that I just showed you. Bitcoin now has 5 months in the red in a row. It's only happened once before when we had a 3x pump, according to Mr. OX Finish. But let's see what we're looking at. So this comes to us from CoinGlass, where they do track performance by the month. We're looking at, pretty much since October, we've had red months, largely due to us hitting the all-time high on October 6th, and then, having the world's single largest crypto liquidation event of $20 billion wiped off the markets in what was effectively a week there, and then continuing through ongoing trade tariff stuff, underperformance in December, January, and February now. So 5 months. Last time this happened was in 2018, which was, am I mistaken? 2017 was the bull market top. 2018 was the bear market bottom. So 5 months there, that'll do it to you. And then after that, in 2019, we really started to pick up steam before we start getting into some funky times later on in 2020 there, but there is a massive recovery. All in all, is this really that crazy of an idea? No, because other people are posting this kind of stuff as well. These are the kind of headlines that I'm looking at right now that are catching my feed, catching my attention, and I think are kind of driving the markets. So price is down. Yes, people are realizing that it's down, but not just like from the sentiment of, oh my gosh, I'm poor now. It's from the sentiment of, I want to buy more. So yes, even though the fear and greed index did drop all the way down to very, very extreme fear there, getting down to 5 recently, well, people are actually looking at this as the opportunity to, scoop up possibly some long-term investment. Traders, I think, are still going to be in for a bit of a rough time just due to the volatility that's going on, which, by the way, that's part of the name of the game. It's why we're here doing what we're doing. But traders, the outlook is uncertain for the next 1 to 3 months. However, if your vision is longer than that, namely in the span of years, then yeah, theoretically, this could look very cheap compared to what you think the price targets are going to be in the future, especially considering the level of buy-in that we've gotten from the overall traditional finance sector this time around. I know a lot of people like to say that Bitcoin relies on the greater fool theory to say that you need someone to buy the thing, otherwise it has no value at all. Well, guess what? Some of the world's largest financial institutions have bought into that same game as well. And as relatively small in scale in comparison, odds are you can bet until they just start completely abandoning it, there will be exit liquidity on the way out. And by the way, shout out to Mr. Marcus72. He says, "What's up, all? Smash the like button." Good to see you, sir. And yes, do appreciate if you do the YouTube pleasantries around here, the old like, commenting, and subscribing. Always love to see the comments that we get for the replays, but we also do like seeing all of our good friends in here for the live streams like Mr. Marcus. So, keeping it going. Next one, we're shifting gears a little bit. Ethereum, a little bit of the talk of the town. We're going to get to that Tom Lee clip in a little bit here, but what we're looking at overall is, again, people trying to pull some technical data everybody going on. We're looking at a rainbow chart here, which is, again, based on the Fibonacci sequence for price levels and price action. So, yeah, according to this guy, it's in the cheap or almost dang near steal area. So Merlin, with a J, Merlin the trader, he's saying, buying hype, selling fear. Ethereum isn't expensive right now. It's boring. And boring is where positions are built. Smart money builds silence. Retail buys noise. Got another one. Gosh, where'd you go? Merlin again. This is actually from earlier in the week. Said Ethereum has been boring for 4 years. 4 years of consolidation. History shows long bases create violent moves. $5,000 is the gate. Break that, and the most hated rally begins. Expansion always starts in disbelief.
We had a 50.
Yes, that is correct. However, at the same time, those 4 years there, that is a full-on cycle, and there was a lot of Ethereum shenanigans along the way. Namely, in 2024, there was the single largest amount of sell pressure through shorting options on the market that has ever happened to Ethereum. And during the time when Bitcoin was pretty much sitting about $100,000, it dropped all the way sub 2,000 again before recovering up to about 4,900. And then we are where we are today after the chain of events that we all know and we've talked about at this point. But the overall sentiment on Ethereum that I'm seeing out there right now is that people think it's historically undervalued and that there are positions to be made and maybe even do some trades from Bitcoin to Ethereum. One example of that person might be Harvard University. They sell 21% of their Bitcoin ETF to buy $87 million in Ethereum ETFs. Yes, fun fact, Harvard is one of the largest investment war chests out there. I want to say they have, last time let's double check this. How much is Harvard worth? Currently sitting on an endowment of $56.9 billion with a B dollars. So all in all, kind of some chump change for those guys. Yes. However, at the same time, it's kind of crazy to say that one of the most prestigious or formerly prestigious universities is, in on the crypto game and is actually making moves similar to some of the boys that we're seeing out here in the market. But yeah. By the way, we have been joined by a good friend of mine. Tracker, how you doing, buddy?
Doing good, man. Sorry I'm late. Apologize. But yeah, ready to jump into here. I'm not sure what you've already covered. I know it kind of alluding to that you seem to be stating how bearish everybody is. Is that pretty much what you've been speaking upon? Is how well, one thing you said that I think was interesting is typically when sentiment is so bearish or bullish, vice versa, when you're in an extreme situation, like I think that with the fear to index had like 5 or 6, I'm ridiculously low. When you're at these suppressed levels where nobody wants to either be involved or everybody in the world's involved, that typically is when a bottom or top is getting put in. And it doesn't take a lot to really snap a market back in the opposite direction. Yeah, the put calls. I don't know if you talked about the put call interest, about how heavy the puts are. I mean, the puts are insanely over. Like everybody in the world is got puts on for protection in the traditional markets. Now, some would say, well, why wouldn't you just sell those positions and just get out? Why get this? We'll call it insurance. Why are people putting insurance down to hedge against their bets? Well, if you're a big hedge fund manager, you know how much what a pain it is to unwind all your trades and everything. There's a lot of reasons why you want to keep those on. And then, but the way you protect them is by putting in puts. So if things do go down, it cushions the blow. So this is why people use those tools, unlike just an average trader who's not dealing with a lot of funds. You're talking, you're talking, tens of millions, if not hundreds of millions of dollars these guys are working with at a time. They do not want to unwind a massive amount of portfolio. So instead, they hedge their bets by using put calls, put in the options markets. And right now, those put options are extremely heavy. Like you're seeing, shout out to Sami. I was watching something that he did. It was pretty interesting. And he had a good chart out there and he brought it up. And it was basically, yeah, you could easily see how much puts are near the all-time high. And when they get to these extreme levels like we are right now, that typically is a bottom. Now, could we have the bottom tomorrow? Could we have it today? No, it could go on for a couple months. It certainly could. But at the same time, all it takes is a little bit of a surprise, and then all of a sudden we're off to the races. Like the Clarity Act. I know we have probably haven't touched on that, but if that were to get passed or something like that, you're going to catch a lot of people blind of what's going on. So I think a lot of the settlement ultimately is just way too bearish across the board. And that's what people need to take away from all this. When something is hated as much as it is, that's pretty much a good time to start thinking about DCAing in if you've been on the sidelines, or if you've been holding. If you can add more, that's great. But selling at these depressed levels, is a dangerous game. Because if you were to sell now, say, okay, I've had enough, I'm stepping aside. The worst thing that could happen is that if things start to reverse, and now you're playing these shenanigans where, oh God, do I get back in? Do I get a third back in? What do I do? And it's a really bad situation to be in. Perfect scenario would be when things are doing really great, take something off, and you have that as protection to the downside on situations like this. If you didn't do that, honestly, what I'm doing, I'm holding and I'm just DCing in. Something that I was telling in our chat groups a couple weeks ago, actually about 3 weeks ago, we were talking about it. If you're in the 401ks or traditional finance markets, and I get it, it's not the same as owning the actual asset itself, like Bitcoin or Ethereum. But if you can actually own in these ETFs that are linked to Ethereum are now starting to pay dividends, somewhere in the ballpark between 3.5% on the year, and they're paid out. Some of the ones I've looked at, they pay out every month. So you're basically just taking that money coming to you, and you're just DCing it in at these suppressed levels. And that's what you kind of do. So you're getting paid while you hold. So nothing wrong with that at all.
True. And just to catch up to speed a little bit here, what you were saying is exactly what I've been finding on social media a lot lately, especially this last week. People are talking about not doing this and trying to find stuff that looks more like this. People have been pulling up the Bitcoin, the Ethereum rainbow charts to show that we are approaching some historically undersold levels. And in particular, like, people are making trades. I know I pulled up the Harvard is switching from Bitcoin to Ethereum. People are showing that Bitcoin and gold is also approaching historic lows for the ratio trade there. And then additionally, whether it's just regular regression or even the amount of wallets that are actually not in profits right now, people are starting to point out that like these theoretically are bottom signals. I think that this is going against some of the other conversation that we're seeing, which is that people are just kind of wallowing over price and saying it's so over. But I mean, to give a shout out to another one of our buddies here, this is not an uncommon sentiment. It's all over. I'm drinking enough to forget the 2025 bull run. Like, hear me out. I've been seeing a lot of that stuff, but lately I'm seeing more stuff like this, which is that the people that I think are really tuned in to what's going on understand what's going on with the markets currently and what the indicators are telling us. Granted, indicators aren't the entire story. However, just looking at things from a historical perspective there, it's like, yeah, these historically have been pretty good opportunities to buy when these sort of indicators line up there. And I think people are either we're seeing the collective IQ start to raise when it comes to the crypto investing and trading, or maybe we're just getting lucky. Who knows?
I think the smart money, keep this in mind. I mean, Harvard Management Company, the HMC, who started to buying up, they're the ones that handle the money for Harvard. They were buying Bitcoin back in 2019,
I believe it.
and they were buying aggressively. So now they're rotating into Ethereum exposure. I wonder why. You know what I mean? It goes back to the whole tokenization, goes back to everything we've been constantly talking about. The big institutions, they're still buying. They're not selling, man. They're not selling. None of them are selling. They're buying. But they've got a much longer horizon. I would just tell people who are in crypto, and this thing I keep reiterating, you're going to have longer horizons. People in crypto want immediate gratification. They want to basically be able to buy something and make, a 2, 4, 20x in a couple of months in an altcoin alt season. But here's the thing. If you're just, if you treat it like stocks, you're going to still see much better gains. You just got to be able to take stuff off the table and not get so greedy. I think people in crypto have gotten way too greedy. It's turned into more of a gambling casino. That's exactly what it's turned into. So bottom line here, we're going to see opportunities here. You just are. And it's funny because people a perfect example would be somebody like Tom Lee. He's sitting there saying that he thinks we could have a little bit of a run up beginning of the year, but then have a hard dump and then recover on the tail end of the year. Is what he's saying. But if you look at their moves, they're still buying. They're still DCAing in. They're not trying to time anything. They're just accumulating. And that's what the institutions are doing. So if you're you need to start thinking about more of a longer time horizon and being more patient. Yes, it sucks. I get it. We've all been here. We thought we were going to get a strong altcoin or something like that. You can chalk up for many reasons. Ethereum price has been suppressed. It's been beaten down. It's been manipulated. I saw an incredible breakdown of the recent sell-off that just happened on Ethereum and Bitcoin and what was going on. We could dive into that, but I don't want to get too much into the weeds. But bottom line is TradFi is mucked things up. That's basically what it comes down to. The TradFi, the way things work with the way traditional markets are positioned and how the system works is messing up the way the price action should be handling. So we don't have an organic natural market anymore. TradFi is kind of muddying the waters up. And that's why you're seeing some of these exacerbated moves that shouldn't be happening. Like the one we just had over the last couple of weeks, that should not have happened, not to that extreme by any means, but it is because once again, you have a volatile market and it's lockstep trying to be a mature market along with the traditional TradFi. That's all their tools and their processes that are in place that are kind of mucking things up. Like I said, we can get into the details of that later, but just saying, but that goes two ways. The other thing, you can have the opposite reaction too. The way this is going to the downside, you could see the same reaction snap back, and we could get extended rallies because of the same reason.
Yeah, that makes entire sense to me. And by the way, you did hit one of the hidden daily doubles. I pulled this clip up on Sunday, but figured it's pretty much exactly what you said Tom Lee is saying. Let's see what the man has to say.
I mean, we should be pretty close because one, I think sentiment is terrible. The price action's been bad. Tom DeMark, who is our advisor on timing, since November, he's been saying Bitcoin would get towards 60 and Ethereum he thinks should bottom. Well, originally 2,400, but he says if it didn't hold there, Ethereum would bottom around 1890. So I think it touched it to the penny. He thinks we just have to undercut it once more, and then that's the low. Meaning we're really close to the end. I think the crypto winter is going to, it's either ended already or the latest is April. So I think we're almost through the winter. When spring comes, crypto spring comes.
Hey, Tom Lee out there, talking his book, which I get it, but TradFi saying, yeah, it could be a bottom, and it could be a bottom because guess what? They're going to buy it up. And the only way to really know a bottom or top is if you make it. Guess who can make it? Guys that size.
Correct. Yeah, and like we keep saying, I mean, longer term horizon and the fundamentals are all intact. Nothing's changed. The only thing that's changing, the thing that would make me feel a little bit better is once we get the new Fed chair in May, that would be a good thing because that's going to get, and I'm hoping he starts to speak and be a little bit more giving some settlement of what he's going to do, and hopefully he's going to be a little bit more aggressive on the rate cuts and stuff, because then that starts to prime the market for what's coming. That could be a momentum indicator. The other thing would be obviously that the bills getting passed and getting through before the midterm elections that could muddy things up. So if we can get those two things there, or at least the first one, the bills, because you're on a time clock, because if the midterm elections do go through, and let's say the Dems do take takes the majority back over again, they're going to lock things up, and it's going to be a stalemate, and that nobody really wants to see that, at least not in the crypto world for right now, because we want some clarity. And if you get these things passed, it's going to now allow the institutions to really let it go. And if you do believe that the institutions are suppressing Ethereum, which is also suppressing all the altcoins and everything, then this would be the green light for them to not suppress it, because they've gotten what they've wanted. Basically, the institutions got what they wanted, because it's really the yield on stable coins. That's one of the big pieces. And if they can get that out of the way and agree to what they're going to do, then off to the races, because now there's nothing, holding it back, and it should have clear sailing waters. And of course, all the other things we talk about, ISM number and all the institution, everything else that's coming out. So it's like check, check, check along the boards. Liquidity should be getting cheaper. We're going to have more funds flowing in. If we get into the rate cuts and everything we talked about, it's going to stem. So right now, would I be bearish? No. I mean, anybody who got out was thinking bearish when we had the run towards the top, kudos. That would have been the time to start taking profits, or at least take something off the table, just like in gold and silver and those other things we told everybody to take some profits off in, because you just can't get greedy. You got to take, when things get, moving aggressively and everything seems really going great in your direction, you do need to take something off. I don't care if it's 10%, 20%, 30%, take something off. And then when you get down to these levels, the more a market goes down, the less bearish you should become. Just like the more it runs and extends, the more bearish you should become. So it's the opposite. So it's been run its course. Could we dump down another leg? Sure, we could. I just think the institutions are going to come in and be buying this up. You saw aggressive, massive volume buying around 1800, 1900 when ETH did get down there. You saw massive buying coming in to kind of put a floor in there. And same thing with Bitcoin. So I think there's too many people that are looking to rotate and gobble it up, and that's really the institutions. So I feel like those are kind of the floor areas. Could we go down a little bit more? Sure, but I think it's going to be very short-lived. When I mean short-lived, I'm talking like maybe a week to a few days. It's going to be aggressively snatched.
I got kind of like two differing opinions on that one, or I guess they're kind of in line here. First one is like, we're already at 6. We already went down to 60K Bitcoin. That's 50% towards the bottom. Getting all the way down to like 70% ish, that takes us down to like low 40K. So maybe there's a train of thought that says, okay, what's another 10K down if it's just a buying opportunity? So that's the thing that says, like, yeah, we could be approaching the low, but even if we get a little bit lower, according to like the theoretical area where we should be going towards the bear market low, it's not that much farther down. So realistically, how much gains are you giving up on the other side if you're just doing a DCA strategy at this point? And then the second half of that thought is, I think some of these bear markets can last a little bit longer than people remember, because the time that you get that single flashpoint of price that is that market low is that usually an instant, just like less than 24 hours, maybe even less than 12 or 2. Yeah, for sure. But at the same time, when we think back to 2022, we spent probably close to like 6 to 9 months sub 25K Bitcoin, just kind of ranging in this area between like 18, 15, 20, 15, 18, 25, back down to 20 before finally getting out of it. And along that entire area, buying up at those prices, still very, very, very good prices, even though they weren't that perfect $15,700 or whatever. So when it comes to the bear market, like, yeah, the bottom is going to be an instant, but I think that the potential for having an extended period down there is entirely possible, and we've seen it before. Yeah. Alrighty. Enough of that. Good. Do have one more Tom Lee clip here for you. This is the one that I actually pulled specifically for today. By the way, if you are talking, I cannot hear you. You are muted.
I'm listening to you. I am. I'm just digesting what you're saying, but I'm also looking at other things as well while you're talking. But it's one of those things. As you're getting to these down low, go ahead and start DCing in if you can and stuff. Just start building in positions. That's the proper way to do it. Hell, I can tell you that's certainly what the traditional finance the guys are doing, and what the freaking institutions are certainly doing. They're DCing in. You're seeing eclipse. They're taking clips as they go down, and that's all they're doing.
True. Alrighty. Speaking of the old Bitcoin going to Ethereum potential ratios, Tom Lee had a presentation for Consensus in Hong Kong this week. He was saying Bitcoin reaches 250K. It implies 12,000 based off current prices. But if you look at older ratios, it points to something else. Let's see what the man has to say.
So if Bitcoin gets to 250,000, which I don't think is a stretch, that would value Ethereum at $12,000. But I think that that's too low. I think Ethereum is really the story for the next 15 years around crypto, because that's where Wall Street's going to build, and that's where AI is going to take place, and also where creators like Mr. Beast are going to be building products. So it may recover to its 8-year high, 2021 high of 0.0873. That's $22,000 Ethereum. And of course, it can go higher if ETH becomes a payment rails like Joe Lubin talks about. So Ethereum and Bitmain's price are highly correlated. Okay. And so if we look at future ETH prices, at $22,000 ETH, Bitmain stock is 500. And at $62,000 ETH, Bitmain's 1,500. So again, the stock, which I'm sure you're frustrated with, but it has no debt. And of course is tied to Ethereum, which is a bright future. So the best days are ahead. So
spoken like a true, marketing guy that has to reassure his investors.
Spoken like a man with the quarterly earning report coming up that he's not too thrilled about.
Exactly. But he is trying to explain to them too that immature asset market that's also going up against the 800-pound gorilla financial institution. It's gonna be violent. It's going to be very volatile. So there's nothing to stay with that. But yeah, based on that, and he didn't even go into this, but he did go into a good deep breakdown, because what Tom Lee's trying to do, we've talked about here before, that people don't understand, well, at least people who don't follow the show or follow Tom Lee, is that he goes in there, they're trying to figure out, how do you price Ethereum? How do you price it? Because if you start migrating all these assets onto the Ethereum network, essentially that brings value to the network, right? It's not just Moore's law, or what's the law that, sorry, not Moore's law. What's the law that has all the people based on the amount of users to a network, that adds the effect, and that basically adds the value to the network? I'm not really stating that. I'm stating the actual assets that are going to be housed onto the actual network bring it value too. So it's not just the users, it's not just the transactions, it's the assets that are on chain that bring value to the network too. So this is something that I really didn't hear anybody really talking much about until Tom Lee was talking about it. And this is a classic case where TradFi is trying to, how do you price something that's really never been priced in TradFi terminology? And they had the same problem with .net, or the .com bubble companies when they came out. They had them way overpriced at the beginning. And they basically priced them they priced them for perfection. And unfortunately, they didn't know how to use the technology at the time. Took some time to figure that out. And I think we're going through that digestion phase now too. And in Ethereum and all are going to have the same problems. You're going to get a pump up when liquidity starts to dry up. So right now is not the time to be thinking things should be drying up. Now is the time that you're going into a very bullish scenario. And I know all the big wigs and all the big players, certainly at Davos, and all the big investors were saying the same thing, that you're going to get a lot of liquidity pump into the market. This is not the time to get bearish. This is a time for expansion. And everybody who's trying to play this safe is most likely going to be on the wrong side of this, and you're going to see a pump. Now, when they start tightening again, or they start even hinting at tightening, you're going to get a dump, and and I think it's going to go into a vicious dump. I mean, a vicious dump. Right now, what we're getting right now in Ethereum and Bitcoin, yeah, we've had some, 50%, 60% pullbacks. To me, this growing market, that's another reason why I feel like this has already been done. Could we go down more? Sure, we can, but you've already trimmed off a ton from where it was in such a quick amount of time. that I think you could see like an event or something that could turn this thing around pretty quickly, or whether or not we go sideways and digest for some time. I'm just saying there's more risk. There's more risk to be left on the sidelines to go up than I think than be in and have more pain to the downside. That's the best way I can try to put it.
I think that's a very fair assessment, especially based on what I was talking about earlier, which is like how much more down is there? And then if you do the math and figure out how much percentage are you losing on the way up, theoretically, I think the answer is not as much compared to where we were probably even like a month ago or something. So that makes sense to me. And then to your point about kind of like the .com bubble like study, saying that the .com bubble was caused by people saying that these are priced as if they were a perfect tool or product. I think that crypto has gotten to the point where it's definitely matured past that point. We've seen a lot of ups, we've seen a lot of downs. We saw the invention of Dent Coin, which was going to be used by all the dentists in the world for their own networks, and that never went anywhere. We saw the NFT craze. We've seen tons of altcoins. We've seen tons of meme coins, pump and dump. And I think based on that, we have enough history to say that we're past that. I think people have a more realistic understanding of what crypto is. I think AI is probably the better example of the potential for a .com style bubble. But I think crypto has definitely matured to that point that you're talking about, which is like, I think we're past that. I think we've had the bubbles. I think we've had the corrections. And I think that the fact that traditional finance is in on it on this level, I'm not saying that it magically blesses it as like, yeah, it's good, it's never going to fail. But I'm saying that like this is coming from the same group of people that went through the .com crash, that went through the 2008 financial crisis, that went through COVID. Like, I hope that the people that are still alive and working at those companies that, you know, have been in the position for the last 20, 26 years have learned a thing or two, can identify this kind of stuff.
Oh no, there's the technology's light years ahead. You can't even compare then to now. What I'm saying about then and now, any new disruptive technology has to go through this painstaking problem of going up and then going down and things like it's the digestion, it's the maturity of the market, what you're seeing. But in crypto, what we always talk about is 1 year in crypto is like a decade in traditional finance. So things move also a lot quicker. Now, aside with Bitcoin, Ethereum's been around now. Which is the third cycle it's going into, right? So it's not like it's new to the game. It's been around. And like you said, all these products have come out and right now everyone's trying to figure out what's the niche, how to take advantage of this tokenization and even recently the roll-ups and things like that nature. So all this new technology is coming out. So no, I'm not comparing it. I think we're much further advanced, much further ahead than the beginning of the .com by any means. I think we've already gone through the digestion phase. The fact that we're talking about U.S. governments passing bills to grease the tracks, and the fact that they're talking about moving the entire, the NASDAQ and the Dow and tokenizing it on chain. I mean, yeah, we're light years ahead of that from when it went through. I'm comparing it to the .com because the fact that this is what you're seeing as a market starting to mature, which goes back to the theory. I don't think you're going to see these exacerbated dumps like you've seen in the past, and you're not going to get the same parabolic moves to the upside comparable to these other runs we've had over the last 4 cycles of this, entirety of Bitcoin. But with Ethereum, I do expect there to be more things. I think it was that natch. I think it was suppressed absolutely during this time, and it didn't allow it to run. Anybody who looked at a market chart could tell you it's been manipulated, and just all the shenanigans that have gone on that we've seen on chain and at central exchanges, and the list goes on and on and on. But when this thing can start to run, and we can start correlating the assets on this thing, then I think, what Tommy's saying about 12,000 or 25,000 Ethereum, yeah, that's not too far off. Now, the big $1 million question everybody's want to know, when? Well, that's a tougher time to state. Who knows what it could do? It could take a violent run. It could overshoot to the upside or undershoot to the upside. You know what I mean? So you don't know. You don't really know where the price could go in a short-term time. But this goes back to what we just said. If you were thinking Ethereum in the future could be at 10 or 12,000 and the price is at now, that sounds like a screaming buy right now. If your time horizon, once again, let's go back. If your time horizon is years and years out, longer term, and not being so thinking I have to have gratification right now, then I think DCing in at these levels and building these positions is what you need to do, and stop getting hung up in the day trading and trying to catch this, because day trading itself is very, very challenging. And then you throw in the fact with the crypto, man, things are violently moving. And for no rhyme or reason. And like we just stated earlier, with the way that the market dumped significantly, just going back at the end of January into the beginning of February, we dumped hard at the end of January all the way into the beginning of February. That shouldn't have happened. We should not have had that violent move to the downside. But once again, it's TradFi's doing it. So there's too many unknowns to trade or try to trade some of this stuff. Now, if you get lucky and you DCA in and you get these violent moves to the upside, then you want to take some risk management off. Absolutely. But yeah.
That's true. And by the way, you mentioned it, so I have to mention it. U.S. laws allegedly getting passed. Well, we do have a small update. Can you guess what the update is?
What is it on the bill?
No, there is no update. The only update is that we're getting more people talking about, I swear, it's happening.
Right.
Soon.
Yeah,
We're on
there's a
the
lot.
cusp of the brink of the edge of the ultimate almost happening, and we're so close, and it's like, got it.
Okay, what's the poly market have it at?
That's a better question, actually. Well said, sir.
Because if there's any insiders, that's where you're going to see them tipping their hands.
Roughly the same-ish. Granted, keep in mind this is 2026, but at the same time, you did raise a really good point there, which is like midterm elections are coming up. Just taking a quick look at the map, like you can definitely see that even just baseline predictions is saying like, yeah, Democrats are probably going to take the majority in the House. And I mean, 19 seats are really the big differentiator here, but as in most the historical trends would suggest that in the off-year elections, the opposite party from the presidency that just got elected in usually picks up seats, meaning that it's probably going to break the other way. If that happens, well, then I can imagine that this chart is going to start looking a little more down, because I think that things are just going to get held up more, and I really don't think that the Democratic Party at this time is super interested in crypto based on anything that we saw during the Biden administration. So, but yes, more people shouting from the high heavens that this time it's so soon. It's so soon you don't even know it. It's right around the corner. Which corner? I don't know. A corner. But honestly, the reason for that being is that there hasn't been any change in position from what's going on with, or at least there hasn't been any public change in what's going on with the banks and the crypto exchanges. Everyone's really sticking to their guns. And as a result, this is where we're at. I will say,
I did want to get in. I want to get into kind of the details of what that recent sell-off, kind of what it looked like. And there's a lot of guys online who did a lot of good research. And this wasn't from one source, this is from multiple sources that did a really good job breaking it down. But let me give you the bluff. So, crypto, and we all know this, right? Crypto has been put in the basket as risk on assets, because and any type of portfolio managers, anybody who's doing this stuff, they treat it as such. And what happened was there was a risk off margin calls, that were basically triggered. And since you had crypto tied into it, they dumped a lot of risky assets. And that's basically what happened. When they did dump those, it basically caused this vicious feedback loop, essentially is how it's being called. So that triggers the sell-off. Then it triggers structured products dealers, the hedging, which knocks down the barrier. So anything that you're hedging, where you're doing your puts and calls, that now knocks down the barrier too, because now you got to unwind those. And this leads to the options, right? So cheap options were for sale. And then what that triggered was also institutions that held their positions. Some market makers, they had to sell shares that they didn't even have, creating unit buyers absorbing it later, because they had to go with such a violent move that they weren't even prepared. And then when that happened, you had more people flipping into this that were trying to buy it back. So basically what triggered it was risk off assets got treated. They got dumped in the portfolio and they got just sold off. And when that triggered it, it caused the unwinding process of, calls and puts. They had to cover their puts. Then they had to sell shares they didn't really have, that then was absorbed by the buyers. And then they had to come back in and then restructure and buy it later. What happened by doing that caused a cascading effect. And this is just what is known as the traditional system. This is why traditional systems suck. This is why the RICO market and the options market are all jacking everything up. So anything that gets in there gets all muddled up. And that's what I'm saying. When TradFi got into crypto, this is the crap you got to deal with now. But the only good thing that could come out of this is what happens when we go to the down. We could see the same exact thing when we go up. So if everyone's sitting on the sideline, not expecting anything to go on, what are those asset managers going to be told if they all of a sudden come out in this? Let's say we get some more clarity here in these bill structures, and we get a more of a aggressive rate cuts. It's going to be risk on, and it's going to be bucketed as such, and you're going to get these momentums going upside, and it's going to be the inverse going the other direction. So that can absolutely happen. So that's one thing. But basically, put the organic markets, they're gone. This is no longer an organic market. TradFi has got their tentacles in there, and once they did those ETFs, this allowed them to control it. And you can call it controlling, manipulating, whatever you want to call it, but the traditional system now has it kind of bucketed with their portfolio managers, and this is the thing that sucks, because shouldn't be treated as such, but that's what it's always being treated. So Bitcoin's hostage to this. Ethereum is, Solana, Doge, but the big one's Ethereum, because so many things were correlated to Ethereum. So if Ethereum is being clogged up into this type of problems, you can see where Ethereum could get suppressed and keep having its problems. And then you throw the other instances like the 10/10 event on October 10th with the central exchanges dumping and things like that happening and being triggered, and then people trying to take leverage, and then all the stuff that happened during that. It's just another fragile piece that can mess things up. Bottom line is this: if TradFi and central exchanges just get the hell out of the way, everything else could probably go just fine. But those days are long gone.
Yeah, likelihood of that is very low without major reform, which, as we can see, basic reform appears to be darn near impossible. So major, I think, is definitely out of the question. Tell you what, though, I know I kind of poo-pooed the Clarity Act thing with we have no progress. However, I did come across an interesting article that I want to get your take on. So coming to us from Yahoo Finance, crypto company Nexo returns to the U.S. 3 years after clash with regulators. Okay. They relaunched in the U.S. on Monday, 3 years after leaving the country and paying $45 million in fines following clashes with the regulators. They paid to settle the charges, but they also did not admit to anything with part of that. And now, recently, they've been seen back in the United States. And guess who they've been talking with? None other than the president's family himself. So, do you think stuff like this is based on the legislation that's being happened, or is it just temporary flash in the pan based on who's in office? Because if we are to believe that this Clarity Act is coming down the pike real soon, then it means people that may or may not have been unfairly targeted by the SEC previously could be looking back at the U.S. as a place to call home again.
Yes, and I think this goes back to what we were saying. The spider web is pretty thick. We've been trying to do a pretty good job here of keeping all the pieces together. We already know that stablecoins are being used to buy U.S. treasuries and U.S. debt. We know that the tariff negotiations 100% have the negotiation of how U.S. debt's going to be handled with these other countries during the negotiations. That was one of the pieces that was being negotiated. You didn't hear a lot about that, but absolutely, this is the deals going on. Now let's tie it now into this piece where you're having, United States is coming back in favor because it's become so pro crypto. You're gonna have institutions and big companies, it's gonna go where it's treated the best, right? The money, right? It's gonna go where it's treated best. Are they gonna go to places like in these other countries that want to tax it at 35-40% and they're going to price themselves out of the market? Probably not. They're going to go where they can go and have a chance at, a more friendly administration. So you're seeing that in wine. I think also we already know that the central exchange, what was his name we were talking about, of Coinbase, he's been doing
Brian
a lot of negotiations. Yeah, it's doing a lot of negotiations with the banks. There's all these back end deals worked out right now. I mean, this is how at least the U.S. government, probably most governments around the world operate. You don't see what's going on, but all the back end deals are happening. Like, okay, I'm going to pass this, but you're going to make sure that these bills here get addressed. So there's a lot of unwinding to try to get your votes that probably are happening right now. So it's real simple. Is there enough money to support and back this? Meaning, is there enough out there to get everybody who's on the fence to get them what they want? like there's no more allegiance. If you're a Democrat or a Republican, there's no more allegiance to your parties a lot of the times. Yeah, you still have to try to stay there because you don't want to get, shunned by your party. But at the same time, they will go where they can get their bills. The things that they're personally care about, they're going to make negotiations to get it on, because and rightfully so, they're supposed to be they're supposed to be a spokesperson for which area they're from that represents where they're from, and that's what they're supposed to be going for. So they should be looking at the bills that they care about, whether that's for their people or themselves. I mean, we could talk all day about that, but not going to dive into that piece. But yeah, so a lot of these back end deals are happening along with these crypto companies that are coming back in central exchanges and doing negotiations. We already know that Ethereum attack and them have been talking. We know that we already know that a lot of institutions have already started putting tokenization assets in place. And I'm talking about JP Morgan, BlackRock, the big players. Everyone's already moving in this direction. So it just tells you it's just a matter of time. It's going to happen. It's just when and what back end deals need to happen to let it happen. And that's all it is. We're seeing back end negotiations. I think they're going to keep working closer and closer to getting what they want. It's just how bad do they want it? What are you willing to give up? To simplify this, it's no different than trying to do a trade in sports, right? You're trying to trade somebody to get what asset can you get out of it versus this, and it's just negotiations. All this is negotiations behind closed doors. We're never going to know what was agreed upon to get these things signed. You're never going to see that. So that's what's coming down to it. But I think by having these companies that are off seeds coming back in here and starting to work with them, that will add more clout to push, and it'll probably push some politicians more in favor of it too. Certainly if it starts hitting on certain companies that can benefit from this, that might be in certain sectors that aren't necessarily in crypto but would maybe benefit from it, from maybe not directly but indirectly. There's those categories too.
That's fair. That makes sense. Stuff is going to get hashed out. We're not going to know, but the other side of that is we also don't know the timeline for that and how deeply entrenched in these positions these people are. Because granted, Brian Armstrong is the CEO of Coinbase, one of the largest crypto exchanges on the face of the planet. And that could either cut both ways. You could either cut in favor of striking a deal, which is like, we got to get back to business, or arguably he could go team up with CZ over there and try to stick it to him, be like, nope, new order. We're going to really try to ram this through. So based on that, I don't know the timeline. When it comes to what everyone else is going to be doing, I think that stuff like the story I pulled up there, I don't know if just the speculation is enough to get people to move back to the States. Granted, people do move on speculation, but it's usually in the negative side, because humans just are naturally more loss averse as opposed to gain seeking, you could say. So I think
you've answered your question though, but I think you've already answered your question.
Which is that we're not going to see more of this?
No, I think you will see more of this, and here's why. So there is a timeline, the midterm elections. They need to get this thing passed before midterm elections. So they may have to give up more than they're willing to give up to get this to go through if they really want it. How bad do they want it? That's one. And the second thing is, if they get this to go through and it becomes law, right? We're talking law here, right? If it gets passed, this becomes law. You have a big major player that just put crypto favored legislation in by law. That will absolutely be ringing the dinner bell for a lot of companies and institutions in the central, and anything tied to crypto will come to the United States because of the infrastructure, because of now you have law in place and more clarity in place. So yes, those two things alone, you have a timeline. You need to get this done before the midterm elections, or the chances of it happening are probably slim. And I'm sure the administration's being told this. How bad do you want this? And the folks that are waffling and that are trying to hold up negotiations, they're holding the cards. They're in the position to say, yeah, how bad do you want this? If you want this to go through, you better get it in before midterm elections, or you're probably not going to get your numbers. And they know this. So you have that timeline. That's they most likely have to get it in before those midterm elections. And then if it does get through, then you're going to see this. You will see more crypto companies and institutions coming into the United States in favor of it, because now you've got law in place.
Fair enough. That makes sense to me. law is much better than just having a favorable executive cabinet administration.
Right,
or
because you
organization.
stated it.
Yeah.
Right, and you stated it. You've stated this many times because you're more closely to the legality of a lot of stuff that you've looked into, and that is, it is much harder to try to reverse a law than it is to try to reverse some executive order or whatever it is. You know what I mean?
Oh yeah. Oh,
Like
by
once it
far.
becomes law, it's yeah, you got to move mountains. So this is why it's such a big thing, and so it just comes down to it. How bad does this administration want to get this done? For
For
our
sure.
sake, I hope they get it done.
Oh, you and me both, brother. Believe me. And I imagine a lot of folks out there as well. There's only a very small, very powerful group that's not interested in this one. But
And you
I'll
could
tell
see
you
it
what.
tying up. Like I said, if they can get this into law, get that passed, and then this tees up for in May, right? When are the midterm elections again? Is it in April? When is it again?
Election day in November, but there are some preliminary elections that are already starting to happen on state
Right.
levels. So you can take a
Right.
look at that kind of stuff to see what's going on.
Right. So they need to get this in before. Ideally, would be great is they can get this in sometime right around when the new Fed gets put in, because they don't want to miss that window either. Because think about this too. This is what I've always been thinking about. There's a lot of institutions and a lot of TradFi and the banks are tied to TradFi, right? They know they want to open this product up to the masses and they want people to start taking it seriously. I know I saw the meme, it was really good, about Coinbase, people booing about when Coinbase commercial came out on Super Bowl and all this stuff. And the sentiment's so low right now. The institutions who've already migrated the stuff over and setting all this up, they want to pull in the masses now. Well, they're going to have to change the narratives for that, and you're going to start seeing probably more aggressive. Once this thing can get passed, you'll see a more aggressive than that nature. And if they know that crypto has already been put in as a risk-on asset, they want to get this in before rate cuts start happening. If this new Fed is going to be as aggressive as that the administration who selected him thought he was going to be, that's still to be determined. So if you really want to align the cards and get the most out of this to really ramp it up and to make a lot of people money, right, in institutions that are starting to prepare for this and have already been working on this for 2 years now and building ETFs and products and tokenizing, yada, yada, yada. If you really want to make money, the best time to do that is going to be right when rate cuts start and liquidity is starting to really come in heavily into the market. And like we said, treating on as risk on assets. So if you want to get this done, you better hurry up and get it done now if you can catch this wave that's about to come through, or it's going to stall out again because you haven't got the bill through.
That's true. That's very true. Tell you what, though, we will continue to follow this one as it evolves. I mean, been following it for a month, some progress, trying to cover all the updates. But if you want the latest and greatest on everything going on, you guys should go ahead and check out our private Telegram group. And you can join that by heading out over to walktheblockndf.com, where you can find the link to sign up for that. Inside of there, you find all the latest updates, what's going on, including exclusive live streams. I'm currently working on a bit of a state of the altcoin world coming up this week, just talking about, yeah, here's what's going on. And I guess small spoiler, the answer is not much until conditions improve on the overall macro. Going to really deep dive into it and see what's going on there, but that is planned for later this week. And like I said, if you want to sign up, head on over to the website. And we like to say around here, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A, go from beginner to intermediate to expert with us. We would love to have you. We would love to see you over there. Alrighty.
Real quick, I was looking at Moonpill's, some of his comments. Those are great.
Oh.
The drinking game one, that's fantastic. Yes.
Yeah.
Yes, we do say it quite a bit here because we're trying to ingrain it into people's brains, man. That's great.
Yeah. Take one drink for buy the dip, 2 drinks for they're still buying, down the glass when in doubt, zoom out. Yes, when in doubt and zoom out is the answer. You can have strategies on the shorter term for sure. But at the same time, I think a lot of what we advocate over here and personally implement is longer term strategies, which is like years on end. We kind of know where this thing's going ultimately. The dips along the way that we follow on a week to week basis, do they feel great all the time? No. But at the end of the day, we know where we're headed. So that's kind of where we're trying to keep the ship pointed, if you will.
And keep this in mind too. When we're as close as we are to this, and think of mine, if you're here, you guys have all been close to this. You've been following this very, very close. We're so close to this, but you go talk to the average, anybody in the world, you'll be lucky you talk to 100 people that might have a clue what you're even talking about out of 100 people. So we're we're so close to this that to us it's like this is a no-brainer, but most people look at it like this is just fugazi, this is just silliness, funny money that I don't know what you guys are even talking about. And right now, like, the sentiment's so low, so it's just compounding the sentiment. So don't be quick to bail, and don't be quick to just get out, because that's typically, like I've always stated in the past, and it goes both ways for girls and guys. You know, you always want to buy the ugly, you always want to hang out with the ugly girl at the dance that nobody wants, you know. And just like the girls want to hang out with the ugly dude at the dance, like nobody wants them at that time, but then they flourish and they come in, so now everybody, oh man, this is great, man, why didn't you tell me about this? And everyone's gonna be saying like, man, how'd you know this? You got lucky, blah blah blah. No, lucky is so far from it. At this point, if everything starts to turn around and really do well, and people here do really, really well for themselves, it's going to be very well deserved, because it has pushed people to the brink of insanity, because it really has. Because we know we're right. We know you see all the right on the wall, yet price action is not responding, and it's so frustrating to watch. And I get it. It is beyond frustration, but it's a long game. Just play the long game and try to get rid of the short game.
Yep. Well said. I mean, here for a long time, hopefully a good time, but doesn't always feel like that in the moment. Exactly. Alrighty. Tell you what, sir, that's about it for this evening. You got any final thoughts you would like to give the folks before we get out of here?
No, just that I would recommend people to go out there and see and understand how the traditional markets work. So there's some really good videos out there if you don't understand it, and you'll see. And if you can find there's probably fantastic videos out there that really break down and give you some graphical representation that show you how crypto used to work on simple supply and demand, and how it works now with TradFi involved. You know, and if you can see this compared, you'll understand why there's things that have been just muddied up bad. And
True.
And prices should be much higher. Just like how the silver market and the gold markets were, completely rotated up to the upside over long periods of time as well. Things eventually come home and run up. Hopefully, I don't expect this to happen, but I mean, people are joking like crypto, like with silver market, it took 45 years to hit an all-time high because of the suppression. Yeah, so.
Yeah, true.
Stay the game. This is going to be an exciting year. I think people are writing off everything to be. I think sentiment's so low. I kind of like it like this, because to me, there's much more risk to the upside than down. That's all I got.
I agree. Well said. Alrighty, folks. Thank you so much for tuning in this evening. Again, catch us over the website. That'll give you the link to the private Telegram. But outside of that, we'll catch you guys every Monday here at 8 p.m. Eastern time. Or if it's a 3-day weekend, I think we've got a good tradition now. We're just going to do it on the Tuesday afterwards. Gives you guys hopefully a chance to actually enjoy your weekend. Gives us a chance to do the same, and also catch up on the news. Because guess what? If it's closed on Monday, nothing's happening in the news world, and that's largely what we cover here. So with that being said, again, thank you so much for joining. Till we catch you guys next time, stay frosty out there, stay safe, and we'll catch you later. Good night.